Mandyy Thomas, and I'm a financial coach. So I help people who make good money, but they're not really sure where it goes, to be able to help them to keep more of it so they feel less financial stress and they feel more financially secure. Liz, did you want to introduce yourself as well?
Sure. I'm Liz and I run Ambitious Adulting. So I help Canadian millennials learn how to invest, be better with their money, and start a side hustle. So I'm excited to learn from you, Mandy, and for our audience to learn from you as well.
Perfect. So I'm just going to get started and give you guys some tips. Basically, going to touch on really kind of how to manage your money during this time. Now, of course, it's going to be specific to whether you're still working, whether your income is more stable or less stable, if you're a business owner, that sort of thing. So just take it into account into the context of what your current situation is and then what you think it may be in the next little bit as well. So the first thing that I would suggest to do is to print off your bank account and credit card statements and really to comb through to see kind of like the past 3 months, what have you actually been spending in what different areas? That's going to make it a lot easier to see specifically for you, where can you tighten up right now to put more money towards your emergency fund. So maybe there's, and I would even look at like the smallest of things, like look at your iTunes account, look at any apps, because a lot of times when there's little fees going out, I call them money leaks and they absolutely add up. But a lot of times we're just thinking of some of the bigger things. So really look at some of the smaller stuff that really doesn't matter, that may just be coming out of your account, and then cancel or reduce. And then whatever amount of money, let's say if you are still employed right now, you still have money coming in, whatever those amounts were, directly start putting those into savings so they don't just get kind of reabsorbed into the rest of your money. So you really are truly setting it aside. And then what I would say from there is to make a budget and see where you're actually at. Like come to terms with like that financial clarity of where you're sitting at the end of the month, just based on your regular fixed expenses, everything that's going out, and then also kind of your upcoming expenses as well. Because this is going to make it a lot easier to see, okay, based on X amount, I have a certain amount in savings right now. This will kind of give you a timeline as to if you were to lose your income, like I would rather have you prepared for the worst case scenario. I would rather have you know, okay, if I was to lose my income, I have X amount of months because I have this much in savings based on this is what my costs are. So that will be really helpful to see what that looks like. And then it lets you know, okay, some of the additional support that's being rolled out that I'm not going to dive into today, but some of the other amazing ladies are going to be diving into over the next few days. It can help you to tell if, okay, do I need to be one of those people applying for some of that extra support? But then it can also help you to realize, okay, I only have X amount of months. I really do need to start a side hustle. So it just gives you the clarity of like, where am I sitting right now in this moment? And if something was to happen, where would I be 1 month from now and 3 months from now? What would that actually look like? Because then you can be really proactive right now and take action instead of waiting like 3 months when things are a little bit worse. Take as much action as you can right now in this moment. Once you have this financial clarity of where you're sitting at the end of the month, whether it's plus, whether it's minus, whatever that looks like, it gives you a lot of clarity to know what extra you have. Because a question that I've been getting commonly asked is, okay, should I be saving my money right now? Should I be stimulating the economy and helping out other small businesses? And this is going to be super specific to your in particular financial situation. And you won't know this unless you go through and you really do know your numbers. So because you registered for this, I can send you a budget template that I have. It's a freebie that I've created that you can absolutely use to start punching in your numbers. It's different than a lot of other templates. It takes into account expenses that are normally left out. So once you put your information in there, you can see how much extra you have, because we do want to continue to stimulate the economy and to help support small businesses so they don't go out of business. But at the same time, we want to make sure you're being taken care of too. So unless you really dive into the numbers, you're kind of just taking a guess, and that doesn't feel very good either. So at least this way you're spending in a way that feels aligned and it feels empowered. So that'll be really helpful for you there. Now, when it comes to when I work with my clients, I don't just have them create like a monthly budget. We base it on whatever their pay periods are. So for example, a lot of my clients who have a 9 to 5 are paid bi-weekly. So what we do is we manage basically we set up kind of 2 columns within the month. So one is their first pay period, the second one is their second pay period. And what we do is we manage the cash flow coming in and out to each pay period specifically. Because this is how you can start to make sure you're not overdrafting your account versus, let's say, for example, if you're paid twice a month, whether it's bi-weekly or whether it's like the 1st and the 15th on set days, if you just have an overall monthly budget, it makes it hard to really see, okay, am I potentially going to be overdrafting my account? Because you're not just paid that lump sum once as soon as the month starts and then all your expenses magically come out. That's not how most people are paid and how their life is set up. So really looking based on your pay periods, because you may have a pay period where there's a lot more going out than the other one. So what I would say is when you list your expenses, also list the days that they come out each month for your fixed expenses. So you can start evaluating. Maybe what I see a lot of times is a lot of people that pay period that is around kind of the 1st or the 30th of the month, whenever that kind of coincides, is typically a lot higher for expenses because they have like a mortgage or rent going out, and obviously that's a significant amount, and then they have other expenses. So what I help my clients to do is to check and to see how balanced is that between whatever their particular pay periods are, and maybe we actually need to move an expense to just a different time period because it would be a lot better, because it's so tight on this paycheck, but they have more wiggle room here. But you won't know that unless you go back through your statements and you look and see what day does it typically come out a month, or what date range, because it may be within a range. So I wouldn't look at what date it's due. I would look at what day it physically comes out of your account. So that will be really helpful. So that's a big thing that I believe is really missed when it comes to managing your money, is the actual pay periods when things are happening, not just the amounts, but the dates. The other thing it can help you with is, let's say, for example, you're paid twice a month, but it's on a set day. So just to make things easy, you're paid on the 1st and you're paid on the 15th of the month. Something that can be very, very helpful there, you're in the perfect situation to do this, is you can change the dates that your fixed expenses come out each month. Instead of what I recommend for my clients who are in that particular situation is to have their fixed expenses come out automatically, either about 2 days after they've been paid. So let's say they're paid on the 1st, they have all their fixed expenses for that first pay period come out either on the 2nd or on the 3rd. It all clears their account right away. Because what I see happens is, let's say if you're paid on the 1st and you have an expense that's coming out like the 11th, 12th, 13th, you're probably getting a lot closer to not having a ton of money left in your account by that time. And that is really frustrating because you're trying to figure out, well, how much do I actually have that I can spend or put extra towards debt? It's really hard to figure that out. So that's where I say, if you're bi-weekly, this doesn't work as well because everything's always constantly changing for times. But if you're paid on 2 set days a month, or even 1 set day a month, or if you're paid on a set weekly each month, this makes it so much easier to set it up right afterwards. And I'm not joking, just this one tip alone for managing money has made a huge difference for my clients who are paid on set days.
That makes so much sense. And sorry, one person has a question, like, because you work with finances for couples as well. How can couples kind of manage this? Lubna is asking, my husband's pay periods and mine are different.
Okay, so are you guys basically paid once a week then? Because let's say he's paid, you're paid, he's paid, you're paid. Is that correct? I'm gonna go with that assumption, but let me know in the comments here. What I do in those situations, so he's set dates and then you're bi-weekly. Would that be correct? And you're bi-weekly. Okay, so what I do is how I have my clients manage their finances is what we do. We use spreadsheets. I don't use apps personally because I find spreadsheets work a hell of a lot better. I used to use apps with my clients, spreadsheets.
I use spreadsheets as well. So I'm a spreadsheet girl and I do pretty much what Mandy's saying. I track everything, and same with me and my clients. I get them all to do at least 3 months of expenses. So going back, downloading their statements, uploading their statements, and categorizing it. 6 months is better and a whole year is the best, but 3 months of tracking it would make a huge difference. And that's something everybody needs to be doing right now. But go ahead, Mandy.
Absolutely. And just always remember that you doing that, that's just the awareness. Because I think a lot of times people are like, oh, great. Then we need to go and we need to actually implement something new from that. But what I would say in your case, because what I have my clients do there is how we do it is we have them basically managing their cash flow on a weekly basis. So it takes into account his pay period, yours, and then there might be some where you guys are overlapping and then some are changing. But instead of looking at it so clients, I'm trying to kind of do an illustration here, but clients who are paid bi-weekly, we have 2 columns, and then it's basically, I have kind of 2 blue lines so this is 1 month, and there's 2 columns within here, which is the bi-weekly pay periods. What I would do in that situation, what I do with those clients is we have 4. So it's basically, we're doing it on a weekly basis. So we can see, okay, each week, what does the cash flow look like there? So it's going to be spread out a little bit more, but I find it's really empowering because it's just so much more accurate. You can see a lot closer. Also, when I work with entrepreneurs, because there's so much coming in at very different times. Every entrepreneur I work with, we do it on weekly as well. So that's what I would say to do in your situation that would work well there. So really thinking about your particular pay periods and managing your money based on that. Another thing I would say is, I know a lot of people are just thinking money's tight and like I'm going to do everything I can to control my spending right now. But what I also see happening a ton is just the feelings of being kind of bored and then kind of leading to buying a bunch of stuff you don't need right now. Even though money's tight, all of a sudden like buying stuff on Amazon or different things like that. So if that's the case for you, try to add in some more consistency in your day, like a morning routine. I know like I am super on point for my routines right now. My life hasn't changed a ton because I do work from home, but just because I see everyone else's lives more chaotic around me, I pick up kind of on that energy. And so I just make sure that I'm doing things that make me feel really good throughout my day. And then filling your time, like if you literally need to actually create anyone who's at home right now who's not used to it, literally creating a schedule as much as you can and filling your time with like productive things, learning new skills versus kind of maybe sitting around watching Netflix, that sort of thing. One of my girlfriends, she's not used to being at home, and her fiance and her stepdaughter at home as well. And she said she's just found that they're just kind of following her around like a puppy right now, and it was driving her nuts. So what she did was every day she has wrote out a schedule of when she is working, and that you physically cannot come into her office during those times. And like she says, if there's something that you need, send me a text. When I'm on my break, I will get back to you. And she said, yes, it was like a firm boundary she had to put in place, but it made a huge difference. So that's a big thing right now too, is just our routines are off, so then it can in turn affect our emotions, which has a huge effect on how we manage our money. So really just taking a look at your routines and that sort of thing. Now, some specific areas that you can look at to save money as subscriptions is a big one. Maybe right now, maybe you don't need Spotify or Apple Music because you're at home, you can use Wi-Fi. This is an interesting fact, is in 2.5 years that I've been coaching clients, I'm not joking, not a single client has ever, when we've looked at stuff, ever canceled their Spotify account or Apple Music. They've all been like, nope, priority, I cannot cancel it. And this is the first time any of them have ever said, you know what, I can put this on hold for now. This is the other thing, is don't tell yourself you have to do this for the rest of your life, because you may find yourselves having a ton of resistance. If something's really important to you, tell yourself, I'm just putting this on pause to build up my emergency fund to make sure I actually feel financially safe and secure in an uncertain time. And I can absolutely add this back later if I want to. So don't see it as that like diet mentality of like, this is what it's going to be for the rest of my life. Because sometimes it's a proven stat that if once we have an expense, we will almost do everything under the sun to keep it. So just keep that in mind, is like, you can absolutely have this back. It's not that it's being taken away from you. You're just making sure you're financially safe and secure during this time. This can also be a great time to switch to no-fee bank. I'm a huge fan. I know Liz is a huge fan of no-fee banks. We can't talk about them enough. And sometimes the reason this is actually an even better opportunity is because you probably have a lot less discretionary spending going on. And sometimes it's tough for people to make a switch because they're really worried about overdrafting their account, not having enough in there. But with less discretionary spending right now, it can make it a little easier transition. What I would say is, get a spreadsheet and list when things are happening. And what I suggest for my clients, because we try and have everything on automatic for them, so it makes it easier to handle their finances. But as you're going through this process, take things off automatic, put them on manual, so you have more control of the dates of when things are clearing, but you need to be really organized to do that. So have a spreadsheet when things, the current dates that they're coming out, and then the days that they're switching. And then you can also have kind of the list of, okay, so this one I've switched over, this one I've switched over. First payment has now went out, like out of the new account. I know it's good, great. So that's what can make it more empowering switching. And also just know it's going to take you some time right now, but it is so worth it in the end. I cannot even describe it. Like, you even just paying $9.99 a month for banking fees is, I think, insane. Because
that is so wild to me. Like, it's, so $10 times like each month times 12 is $120 a year over 10 years. Like, come on, guys, get on the free or the no fee banking for sure. And so I had one more suggestion when you were talking, Mandy. Because we're at home more, we need less data. So one of the things you could look at is reducing your cell phone bill, because so many of them are so expensive. Like, I pay so much for my cell phone bill. I don't know why, But this might be a good time to be like, you know what, I'm at home, I can use Wi-Fi, I don't really call people. Again, this is super, super personal. Maybe you can look at a cheaper plan for now, and then when finances are a little bit more flexible, you can upgrade or go back to your original plan. This is just another suggestion that you can look into.
100%. I love that one. Another one I would say is it's a perfect time to negotiate different prices on services you have. So let's say, for example, maybe you're feeling pretty financially secure and you're actually wanting to invest more. You've got an emergency fund saved up and you're not looking to cut back on quite as much. Well, this is a great chance for you to negotiate the things that you want to keep, because service providers are going to try and do a lot more for you than they ever have before, because they want to keep as many people as customers. So this is a great time to negotiate literally as much as you can. And if you have a credit card and you have credit card debt, negotiate your credit card interest rate, get it lowered. If you're a homeowner, you can look at potentially refinancing your mortgage to a lower interest rate. I have a few clients who were good candidates for this. It worked out well for them. It depends what you're currently paying right now. The other thing is, I'm not going to say any percentages, anything like that, because things are changing literally by the day, but it may be a good option for you. It's something that in the past I didn't suggest to a ton of clients, because in the end, it wasn't always worth it for the cost that it took to do it. But right now times are a little bit different, so that may be an option for you in that regard. And if, let's say, for example, for credit cards, if maybe you don't have the same amount of income coming in, maybe you didn't have an emergency fund, what I would say is pump the brakes on paying off your debt right now. Now, hear me out on this. Keep making your minimum payments, but if you don't have any emergency fund right now, I would much rather have you talk to your credit card provider, ask them to put you at 0% and not to be charging you right now at the moment for interest. There are some companies that are doing that for my clients, and build up that emergency fund quicker. So at least you're not accruing more interest right now in the moment. And I understand you want to be paying off your debt, but this is just a time period where you would rather have a little bit more certainty right now than throwing extra towards debt, unless you're in a situation where you already have that emergency fund built up, your income is more certain. That's different. If you can go ahead and you keep putting more towards it, awesome. But really think about where you're at and how much money you have saved and how secure you're feeling in that, and take into account your situation, your partner's situation, your job security, that sort of thing. This is one of those times where it might be a lot better. It is a lot better to have extra cash on hand right now. Now, I'm going to mention something now that any mothers on the call, this might be a little bit triggering for you, but I'm going to just say it because it's something that needs to be heard, is if things are tight for you right now, it is totally okay to pause putting money towards your kids' education funds. That is totally, totally fine to do. That does not make you a bad parent, and you can always contribute more later. But if, let's say, for example, if you're putting $100 a month, that $100 can just help to build up that emergency fund, make you feel a little bit better there. The other thing, always remember, your kids can always take out student loans later. Your kids can always work through college. I know personally, I didn't take out a student loan because I hustled, and I also didn't work through school. My schooling was pretty dang tough, so I did everything possible. I don't think anyone could have went to school cheaper than I did, because I was like, I'm not taking out a loan, I'm doing everything possible, and it was the best thing I could have done. It was an amazing experience the way that I went through it, and it's really good for your kids to learn to be resourceful. So don't feel like a bad parent if that's something that you need to do right now in this moment. Another thing that I would say is, depending on your situation, this is another option that you could do, is if you have trouble with overspending, something that you can do is having 2 checking accounts. So one would be for your fixed expenses. So that's where your income would come into, and all your fixed expenses would come out of there. And then you could decide what you're going to transfer into your discretionary spending and have a debit card set up with that one. So that's what you use to swipe for kind of your extras or different things like that. So at least you know all my fixed expenses are being paid, and I know that there's money in there, but you only kind of have access to a smaller amount to spend. I have some clients where that's worked well for them. So that is just totally another option. Take from here what will work for you, but definitely make sure you pick things to absolutely take action on. The other thing I'm going to say is just don't turn a blind eye right now to your finances because of being scared to look at them or anxiety around the numbers. When you look at them, it actually reduces the anxiety, because what I've noticed with myself and working with clients is there's so much more anxiety when the unknown, you just don't know. Like when you're like, I know I'm not in a great situation, but I'm not really sure how long I can last, that sort of thing. When you look at it and you focus on what is within your control, that honestly makes the world of a difference. I had a ton of anxiety around money, especially like I came into the workforce in 2008 in a recession, seeing a lot of people that were talking about how much money they lost, but I didn't understand because nobody was explaining how truly it worked. Everyone was talking about all this money they lost, but they actually didn't lose all this money because they didn't cash out their investments. But as a kid, I didn't understand that. So I came into the world with so much anxiety. I already had money anxiety, and then this made it worse. And then what I did was I just focused on all the things out of my control. So please take all these tiny tips that are absolutely within your control and make that what you focus on, and just be careful what you're taking in for media right now, because that can also kind of, what I see a lot of people right now is almost paralyzed to take action because of all the fear. So just be careful and take that into account as well. And then what I would say is, after you've kind of come up with your budget, what it looks like, just that clarity of where you're at on a normal basis, is I would say to duplicate that and then call it like a just in case budget. So if, for example, you all of a sudden do get laid off, your income drastically reduces, right away, you know what's within your control that you can further tighten up. And I do this with my clients. I do this with my clients actually before any of this even happened. We just do this as an exercise to begin with. So if anything is to happen to them, right away, they have that sense of mind and that peace that they literally can go to this to see what further changes they can make. Because it's almost empowering knowing, okay, if worst case scenario does happen, what can I actually do? It doesn't make it worse, it actually makes it better, because you know right away what you can do in that situation, and it gives them a sense of empowerment and control. I also work with a lot of entrepreneurs as well, and I have one of them that her income completely stopped coming in because her business is in person. Literally, it came to a halt. So no income coming in at all, and she has a family that relies on her. So what we had to do was get super creative as to what could she do from home and transition her entire business online. Liz is fantastic about talking about this as well. She's also going to be doing a side hustle class, which I highly recommend every single person attend as well. And so what we did was we just had to get really, really resourceful with my client as to what could we do. She was a personal trainer, rented out equipment. They did a fee for delivering the spin bikes. Now they're doing their spin bikes. They're doing virtual classes. Her son, who's 10 years old, wants to pay for his own $53 cell phone bill. So her son is running his own class where he's doing basically kids fitness classes, so he can pay for that to help his mom out. Like, they're getting insanely creative, and seeing her income being almost at the exact same amount when it was completely gone, you guys, is the greatest feeling ever. So you just have to be a lot more creative and resourceful right now in these times. And I also believe these times what really can help you to get ahead, because you're thinking differently and you're also not worried about the judgment of other people as much, because everyone's having to get creative right now. So that's actually a huge bonus. There's a lot of things going on right now you can see that can feel really empowering and positive versus kind of really, really negative, because it's easy to feel that way right now. And
Mandy, sorry, can we go back to, I don't want to get too far before leaving this question about emergency funds and how much you should have. Mm-hmm. I always think like 3 months to 6 months if you can, but minimum 3 months. What are your thoughts on that?
I 100% agree. I always say minimum 3 months. And what I say is, because a lot of times people will hear 3 months, but never look at what they actually need for those amounts. Like, okay, figure out what you're at, times that by 3. The other thing I say is, to make it feel a little bit better, is even 3 months of emergency, like that just in case fund, whatever that number is, because you'll have your regular budget, and then you'll have, okay, if something was to happen and this is the expenses we went down to, like we cut cable, we cut this, like we don't need all these extras, this is what we would be at. I would say like at least that 3 months of your emergency time there, like your just in case fund, do 3 months for that. And it also really just depends on your lifestyle. If anyone else is counting on you, it's different for me because I don't have kids. Any other questions? I know we've got 10 minutes left, so I'll open it up. If anyone wants to just unmute themselves to ask, you can absolutely type in the chat. But you can unmute yourselves as well.
Yeah, I mean, I've learned so much already. I don't do the 2-week column, but I think that makes so much sense for a lot of people. Personally, I go in every month and look at my expenses for the previous month and then try to kind of get a general picture for the next month. I moved away from kind of strict budgeting because that's where I am in my life. I think at the beginning, people need to be a lot more conscious of every single dollar. And then you get to a point where you're a little bit more comfortable with your spending and you know yourself a little bit better. And so I've loosened up, but I think for sure right now, if you don't have those 3 months of expenses categorized, that's definitely the one thing that you should do after this call.
I completely agree with Liz. And the other thing is, like she just said, she used to be so much tighter on it, and she's really dialed things in well. So she's able to be at this point now. So that's a really empowering thing to know, is you don't have to be micromanaging for the rest of your life, but you really do need to dial things in and be really paying attention to it until you have those new habits established. Like now you have all those habits that you didn't have before. So really just taking that into account, that you can get to the point where it takes less time, it takes less management, and you can focus on those other things that can really help to build it up, like your side hustle and just increasing income.
For sure. And it really is all about money management and habits. A lot of us know what we have to do, and all these tools that Mandyy is providing and all the other experts are going to provide are going to make it easier for you to track your expenses, make a budget. Like, we've all heard this time and time again, but then we're like, okay, but how? How does this actually work? So Mandyy has templates. I have templates. There's templates online. And if you're like, I don't want to use a spreadsheet, okay, no problem. Use an app or use pen and paper. Use what works for you. There's hundreds of different ways. Just do it. Like, make your expense tracking sheet however makes sense for you. So let me just pop over to the questions that people submitted. I know you covered so many of them, and that was amazing. People are kind of wondering, I think the most common question is like, should I be saving? Should I be investing? Should I be squirreling away into my emergency fund? And you kind of covered this, but what's kind of a clear sentence for people to like know what to do?
Yeah, so definitely it's absolutely specific to your situation, but I would say if you feel really financially secure and you have at least 3 months of a solid emergency fund, then you know what, maybe investing is a better option for you. But if you don't have those 3 months, right now, I don't think you diving into investing. Also, it depends. Like, I've got some clients that their income is super steady and their life pretty much hasn't changed except that they're sitting at home. So it really depends on your income. If you think that there's even a chance that your income could be affected, really just focus on building that emergency fund even more. Because let's say, for example, if you're just even putting like small amounts into investing right now, really that's not going to make a huge change for you in the big scheme of things. That I would rather have you feel financially safe and secure and taken care of than trying to put it into investments right now. Like, the money that you're putting into investments, that's money you know you do not need to, you are not touching for like at least 40 years. So if you're super confident that that money can go in there and you're not touching it under any circumstances, because what I see happens is when people pull out money, it's at the worst possible time. Like, Liz and I both know our investments are down like tens of thousands of dollars right now. And what I honestly believe is that you just really don't need to look at those numbers right now. It's the worst possible time. Leave it in there. It's not truly going to lose because we're not pulling it out. If we pull it out, we're going to take a huge loss. So just take that into account right now. Whatever goes into that investments, you want it to stay in there for a really long time. So I would say it really just depends. And if you have a lot of anxiety around money and feel super scarce to begin with before any of this started, then maybe investing right now isn't your best option. Maybe it's still just building up that emergency fund even bigger.
I agree 100%. Like, I am pro investing all the time. Like, I've been investing for a decade, and this is like a really kind of horrible time for my accounts, like it is for everybody. And for me, my personal strategy right now was to build up my emergency fund because my income was affected. And so normally I'm like, oh yeah, I have money coming in and invest and saving. Like, I kind of know my strategy. And now I'm like, number one focus is continue to build my emergency fund. I have 3 months. I'm working on 4 months, 5 months, and I want 6 months to feel pretty comfortable because my income was affected. And then I'm investing a little bit, like very, very small amounts. Again, because I'm already comfortable with what my strategy is. But if you're like, I want to get into investing because this is the best time, everything's on sale, and you don't know, focus on that emergency fund first before you jump into investing, because this is a very volatile and tumultuous time. And again, as Mandyy was saying, it's about the media you're consuming. Maybe you're hearing like, this is the best time to buy. This is the best time to buy. But it might not be the best time for you, because if you run out of your money from your emergency fund and you lost your job and now you have to sell your investments to pay your bills, that was not the best time and that was not the best decision. So yeah, we have a few minutes left, so I don't want to get cut off, but I definitely want to answer anything. If anyone has something pressing that they want to ask Mandyy, we pretty much covered that. But Mandyy, where can people find you if they want more information, if they want to connect with you, if they maybe want to work with you moving forward? Let us know.
Yeah, so I'm mostly active on Instagram. So I'm at Mandyy Thomas, and Mandy has 2 Y's in my name. I'll just type it in the chat here. I share tons of tips and tricks on there, as well as, of course, a great place to follow Liz as well. But if you have any questions, I can't help you right now if your income has been really, really affected to the point where you don't have it coming in. I'll just be straight up honest about that. If your income is still coming in and you want to just get clarity with your finances, dial things in, see where you can really make improvements, please reach out to me. What I do is I just have a free 20-minute call with you. I also do an application form to make sure I truly can help you, because I know I can't help everyone, but I help the people that I absolutely know I can. So if you feel like I can, please reach out. You'll fill out an application form. We'll have a conversation and then see what's the best option for you, because I do have different ways I work with my clients. And what I would say is maybe you guys just switch your focus a little bit more from certain accounts that make you feel crappy right now. Do a lot of unfollowing for things that are either making you feel crappy, and maybe follow some more financial professionals to really help to build up your financial literacy right now. The other thing I would say, there's a free app called Unroll.me. It's incredible. It would be perfect to go through, and what it does is basically hooks up to your email, and you can go through within like 2 minutes and unsubscribes from so many emails. So if you are someone who's tempted because Lululemon sends something to you or something else, this is the best time to unsubscribe from all of that and to just not see anything. It's also really helpful for anyone who has overspending. So I would say download that app so you're just not seeing as much stuff coming in. It also reduces the feeling of overwhelm. So that's just total side note there. But yeah, really just take this time to just focus on your finances, and also just figuring out where can you have multiple streams of income. I think every single person under the sun should do that. So please come to Liz's other class for that, because she is amazing on that, and I really want you to be able to take that information in as well.
That is so sweet of you. Thank you so much. Yeah, I just decided, based on kind of the feedback people were getting, I'm like, okay, I know for a fact that everybody needs to have multiple streams of income. It's the only reason that I'm still afloat. And so many of you guys, unfortunately, have lost your main income or your jobs, and it's like horrible. So stay tuned for those details, because I'll be releasing the information. Okay, we have one question, but we have like less than a minute left. So hopefully we can answer this. Should I plan I've lost my part-time job and we're using the savings. Should I plan to use this emergency fund? So if you've been saving for a holiday, if you've been saving for tuition, obviously there's priorities here. If you have been saving for a holiday, I'm sorry to say this, but if you don't have an income right now, that holiday money needs to come into your emergency fund, and you got to restart that holiday fund. So really, if you have pockets of money sitting around for other things, it's all about priorities. Right now, priorities is paying your bills and making sure you can live, a happy, normal life, and a holiday can wait. So on that note, sorry to be harsh, but make your list of priorities and get your finances to align. So thank you so much, Mandyy, for coming on this show, masterclass. You guys follow along on Instagram, and we'll see you on the next video.
Yeah, thank you guys so much for coming.